morning, everybody. How y'all doing? How y'all doing? Y'all already know the adventures don't stop. Running a tad bit behind. Did I share the link in the chat? I mean, in the members area. Let me see if I shared the link in the members area. Then we get started. Your channel membership. I just came in the house. My sinuses are draining. I don't have any tissue back here. I'm sorry, y'all. Give me a sec. I just walked in the house 14 hours ago. Here's the link to pull up. No, I didn't. I thought I did. I thought I shared the link. Let me share this link and then. Which link is this? Oh, yeah, that is it. That's it. That's the link. Because I just tried to pull up. Yeah, that's the link. Yes, that's the link. How do I get? Wait a minute. Okay. Wait a minute, y'all. No, that wasn't it. Yeah, that got to be the link. That's got to be the link. Okay. The way I can figure it. I'm sorry, y'all. I'm trying to figure it. I can't remember what I did. Yes, that's got to be the link. No, that's not it. No, that's not it. End it. All right. End it. That's not it. Okay. I'm all over the place this morning. I could have swore I did this last night, but I guess I didn't. I guess I did not. All right. That's done. That's done. That is done. I need tissue. I don't have tissue. Y'all, excuse me. Whoa. Put too much of that on there. Way too much of that on there. Cheese and rice. Way too much. But it means for you to get your hands sanitized with that bottle of sanitizer right there. That thing squashed out like lotion. Hey, man. Good morning, good morning, good morning. Thank you for tuning in. Thank you for putting up with my tardiness. Thank you for putting up with my everything this morning. I'm all over the place, man. I'm all over the place. Welcome, welcome, welcome. You're far too kind. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in, y'all already know the lick breed, and I love you back. If you're not subscribed, yada, 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 all of that right there. Black spiders, question of the day. Since today is FOMC and the morning may be lackluster, do you want me to do the commentary, record the screen, and do my analysis for the PM session? So record from like 1:30 to 2:33ish to 3 because Powell gonna be talking. So from like 1:30 to 3, because I got to leave about 3:15 to get tempted. So from 1:30 to 3. So you want me to record and do my analysis for the afternoon session. Put a 1 for do the morning session, put a 2 to do the afternoon session, and that will be that's the one I'll do. 1 for morning, 2 for afternoon. Thank you very much. Now, let's get into the price action. And the link is in the membership section if you want to I know I did not see a 3. Did I see a 3? Okay, I'm tripping. I know I ain't see a 3. Good morning to everybody. How y'all doing? Everybody in the chat, everybody not in the chat. What's going on? Hey, I have not updated anything on my charts outside of nothing. I ain't updated nothing. Looked like I might have set the London Open because I walked back here this morning to do something, and then Calandra had called me, and yes, I did. So I set the London Open. I haven't done anything. Speaking of haven't done anything, Lil Hawk, man, I'm sorry. Let me go. I'm pretty sure some other people in the Discord already, you know what I'm saying? Because I know the other day you asked me to look at something. You was like, check out something in the Discord, and I did not do it. I'm sorry. Let me go look. I'm looking at that right now because I'm going to forget, and then we'll get into the price action. 15-minute time frame. Took a short, but stopped out. Once the bullish order block could be a breaker, was traded through by the SIBI. I anticipated that the bullish order block, it would then act as resistance. Then the SIBI also broke market structure. For further confirmation, there was a bearish order block right above the bearish fair value gap. It took, hold on. I'm sorry. I need to open this in the browser. I read this. Took it short, but was stopped out once the bullish order block was traded through SIBI. Okay. All right. Will show the block will then act as resistance. For further confirmation, there was a bearish order block right above the bearish fair value gap. Okay. So we got that. Took the trade back into the fair value gap. The trade didn't work in my favor as I thought. It sailed down to take out the equal lows for my target. What I missed, I was not letting price go to a premium. Okay. All right. What I missed was not letting price get back to a premium. Okay. So these just notes. These are notes, but okay, let's break it down. Should have waited for price to get back above equilibrium. Okay. All right. What is he? What are you asking for confirmation on? Let me see. Just look for some feedback and confirmation that this was a decent trade to the downside, still learning, still growing. All right. What I missed was not that. Okay. All right. So this is your. All right. Sorry. I'm trying to get my thoughts together. All right. My reading ain't reading today, and my understanding ain't understanding. So you want feedback and confirmation. All right. So I'm assuming these are your notes to yourself because you put what I missed was not letting price get back to a premium. Them notes for yourself, these notes for yourself. Okay. So now those your notes. That's your thing. So I'm gonna focus on the trade and give my feedback on the price action, right? This 15-minute chart, I can't see much. What day was this? I need to look at this on the chart. I need to look at this on the chart because I need more than just this snapshot. Lil Hawk in here, and Lil Hawk not in here probably. What day is this right here? All right. So just looking at what I'm seeing here, we're coming up here, right? I can't see to the left to see where we went, right? That's an important piece of the puzzle, right? Important. So for Lil Hawk and anybody else, right? I need to be able to see. Did he say when he took it? March 21st. Okay, let's look at March 21st. Let's look at March 21st on the 15 minutes charts. That was that was yesterday. Okay, so yesterday. That was yesterday. All right, so get out of the way, little kids holding hands. All right, so I'm assuming that line is maybe like 8:30, 9 o'clock, maybe. Let me see. March 21st. All right, let's get it to look like that. March 21st, 9, 15-minute candles. That's not that high. That's not that high. March 20th. Okay. March 20th. Okay. That's that high. That's that high. That's that. That's that. That's that. Okay. All right. So this is the okay. So you was going short off of this right here. You were going short off of this right here. Okay. This is which entry top of green? Oh, you went short here. You went short there. Oh, that's easy. I ain't even got to do the rest of the thinking. If you say entry at top of green candle, right? If you went short here, right? I ain't even got to do no more digging. This right here, you got this upside risk. You got a fair value gap there, and you got an order block here, right? You got a fair value gap and an order block there on the 15-minute, right? I say this all the time, right? I say this all the time, and ICT talk about it too. If you're trading fair value gaps, you always got to take into consideration the upside or downside risk. And in this trade right here, you got a bunch of upside risk. You got a fair value gap above it. You got an order block above it. So price could always come back up into this right here. Now, let's do this right here. Let's go a step further. These 15-minute, one thing, I want to say this, right? Every time frame, the higher the time frame, the more risk tolerance you have to have, because there are the moves are bigger. There are underlying things that's going on in these 15-minute candles. There's a lot of price action. A lot of people like to call it noise, but it's not noise. It's important price action that's happening inside these 15-minute candles that you can't see looking at the 15-minute candles. That's why we go. I can move this out the way. That was the issue right there. The bottom line up front, what you missed, one, you were right about not letting it get to the premium, and two, the second thing you missed that you can add a note to if you want to, right? Like I say, I don't discount anybody's the way they think, they thought process, right? So again, with your notes here, when you said what I missed, not letting price get back to a premium, absolutely right. 100% right. Right? You didn't let price get back to a premium. And to visualize that, right? You always want to be aware of where your equilibrium is. You always want to be aware of where your equilibrium is, right? And in this case right here, what is this purple line here? Let me move this stuff out of the way. All right. Right. So you always, matter of fact, let me do this while I'm thinking about it. This right here was the bearish order block. I don't have a 15-minute. We're just going to use this 4-hour. And then this right here was the bearish fair value gap. And we're just going to do that just for color's sake, right? But you always want to be aware of where your equilibrium is, right? And in this case, you're selling in a discount. So again, 100% correct. What you missed was not letting price get back to a premium, right? You did not let price get back to a premium. Now, with more context, you know what I'm saying? And for future reference, if for anybody, not just for me, but if you asking for feedback from anybody, give more context in the screenshot like this, so you can see what price has done, like what highs or lows it has attacked, what has price done? You know what I'm saying? What has price done? Give so you can get a little more context to it, because it's kind of hard to give a thought on just a zoomed in snapshot, right? So what I was saying, oh yeah, equilibrium. Like you said, you didn't let it get back to a premium, right? Because looking at this right here, this is telling, you know what I'm saying, a story, but there's so much unknown over here, it's kind of hard to tell. But you should have let price get back up here. This would have been the area to be wanting to sell. If you're a fair value gap trader, this is the fair value gap you want to be selling off of, because it's in the premium of this price leg. Like I said, that's you 100% correct with your thoughts of what you missed, right? You got stopped out because you entered in the discount and your risk didn't. Now, this is what I was saying about different time frames, right? So this was just a bad entry. Bottom line up front, no way to sugarcoat it. Bad entry on this, right? You know, looking for a reason to short here. Looking for a reason to short here. Now, this was a bad entry based off of what was going on there. Let me say this about the risk. Now, I'll say that about the risk later. Now, looking to want to short there, right? So looking at the 15-minute chart, right? Looking at the 15-minute chart. That's why I say I need context over here to see what was going on, right? We're going to get rid of the benefit of hindsight. We're coming here from when you made the entry. Yep, there you go. We're coming there from when you made the entry. Now, looking at what price has done. We came down, took out sell side, right? We came down, took out sell side, came down, took sell side out. You know what I'm saying? With heavy distribution, once we took sell side out, we consolidated down here, right? Consolidated here, and then boom, left that area, right? We consolidated and left that area. Now, when we left this area here, we anticipate this being a balanced price range, because we offer buy side and sell side and we took off, right? Now we come up here, we got a nice huge SIBI there. We got a BISI on the other side, opposing PD arrays, right? And then we leave this area here, opposing fair value gaps. And then we leave the area, right, after this consolidation there. So now what? We can assume all of this down here is a balanced price range, right? All of this right here is a balanced price range, right? Then we came up and we took out the buy side there, right? So boom, buy side has been taken, right? We just thinking through it. We pretending like we don't have the benefit of hindsight, right? We pretending like we don't have the benefit of hindsight. So this is all we can see. Buy side has been taken. Buy side has been taken. Then we came down, right? So we're watching how we're dropping, right? We're watching how we're dropping, coming down, coming down, coming down, coming down, coming down, right? If we come up, think about, okay, this is what I try to focus on, and it's one of the things that I learned from Michael, right? When you're taking out buy side, right? When you're taking out buy side, you're running out buy stops, right? When you run out buy stops, right? Smart money is buying from willing sellers, right? They're buying from willing sellers, right? So now, where are the willing buyers, right? Where are the willing buyers? You know what I'm saying? The willing buyers, right? Coming from the bottom here, right? We running out these stops here, so people going long, so price take off, right? At this point right here, at this consolidation right here, and it take off again, you got some people who stops with, let's talk it through here. Went long, your stop is down here, right? We're gonna walk through it like this, right? This kind of stuff I try to keep in my head when I'm watching price, right? When I'm watching price, I try to keep this in my head when I'm watching price, because this is one of the things that helped me a lot. Like y'all know how y'all see me saying like this is a balanced price range, this is that. I don't expect price to go back down there until it handle business. This kind of stuff that be in my head, right? So let's move over here. We're gonna walk it from here, right? Price came down. We had sell side liquidity there. We dipped into it, and now we're just soaking it up. We're soaking up the sell stops here, buying, right? So everybody that's buying in here, when we start to leave this area, this is where the stops are, right? So now everybody's stops are below this low right here, right? Going up, right? It starts consolidating here, right? And it starts to move away again, right? Price took off again, right? So now, since price took off again, it's leaving again. Now, they said, okay, I'm safe. I can move it to here, right? Right? Because they ain't move it there yet. They like, okay, it ain't safe yet. But now we done consolidated here and we done took off again. Now, ooh, look at all this support. Look at this, right? We broke through this. Remember, like we thinking in the terms of like retail trading, right? Right? Support, came down, should be resistance, took off, came back down, failed to get there again. Oh, the bodies of these candles right here, real strong right there. This area, this is where the, get on that body. This is where the real area of support is right there at them bodies. Ooh, that's strong support, right? So then boom, that's a strong area of support. That's where the sell stops go now, right? So we go up, right? Take out buy. Oh, they done took out buy side, right? We done took buy side out, right? Buy side has been taken, right? We still ain't had no reason to move the sell stops yet, right? Buy side has been taken. We start coming back down, right? And this is where you entered right there, right? That's where you enter right there, right? So you went up there, it came back down, right? That's where you enter right there. What was the reason for this area failing? Because it was still in the discount, right? If you would have went short here, right, would that have been a good short? May have been, may not have been, right? Let's see. Right, coming forward, you hit that area there. Now let's see what price did when it came down here. We pretend like we ain't got the benefit of hindsight, right? We was wanting to go short there. We came down, right? We took out this low right here, right? We took out that low right there. The people who went short down there, their stops is either going to be here, maybe there, right? If you're smart, your sell stops will be there, right? If you're worried, your sell stops will be here, right? But we're just saying we're smart. Our sell stops are still there, right? So we came down and we took out this low right here, right? That low is taken out right there. So now, anytime we take out, let's just go forward and see what happened with the trade, right? Went all the way up into the order block, consolidated a little bit, came back to equilibrium, came back down to there, and kept going up, right? So it was not successful right there. Now Let's go back and look at why it was not successful, right? Looking at what, now we just looked at what the sell stops and buy stops did. Now, let's go back through and analyze exactly what has transpired, right? With the details, get all of the details. Now, looking here, we came up, came down over here, rejected off of here, pushed up. Now, we said this right here was considered a balanced price range. This is all the stuff that, this is all part of being a trader. This is all the stuff you got to look at, right? We know that was a balanced price range because we said we left that area there, came up here and consolidated, and then we left that area there, right? Right. So we're coming over here. This is where we took off at, coming from here. Consolidate, consolidate, consolidate. Right. So from that high, coming from this high, because we trade in both ways there, came all the way down into that imbalance, and then we left again, right? And we left again. So we're coming all the way. We got this down close candle right there to stop price. All of this right here. That high right there. All of this. You know what I'm saying? We're counting all of this as a balanced price range because all of this right here is that run. This is the left. This came back and took care of that imbalance, and that's the leave. So from this high there, right, that highest wick on that candle from when we left, that's your balanced price range right there. And then as you see, we traded both ways, taking care of that imbalance. So all of this right here is a balanced price range, right? We just ran sell side. This is a balanced price range. What does it mean when you got a balanced price range there, right? Price just came down, took out sell side, and then left, and this is balanced out. So that means you don't expect price to come back down here right now, right? On the higher, depending on how far up you go, this price action will just start to turn into a wick, right? Let's see if let's go to 4 hour and see right there. When we go to 4 hour, you see how the 4 hour looks like, right? On the 4 hour, this is just a long wick, right? That's a long wick. So you've come down and you've just run stops under here and rejected up off of it, right? So that's a balanced price range now. And since that's a balanced price range now, you don't anticipate price going back down there, right? You don't anticipate price going back down there. Now let's go back to 15 minutes, right? So back on 15 minutes. Now, from the higher time frame, it makes more sense that we just ran stops. But from the lower time frame, we just ran stops. Look like, okay, this is balanced price range, we left it. This is a balanced price range, we left it. You see what I'm saying? We just ran stops, right? So if we just ran stops, all of this box right here is just ran stops, right? So we shouldn't be looking to run stops again unless it's on a small time frame. Like price is moving this way, right? Price is moving that way now. So we should be looking for reasons to buy, right? That's one. That's one thing. That's one thing that helped me with it. That's when you hear me say, I don't like trading against the grain, right? A short over here is trading against the grain, right? Can you find a short in there, right? But this right here was not, with the benefit of hindsight, you know it's not a high probability short. But when you start to look at it here like this, right? This is where the sales stops are now, based off of walking it through. All of this right here is balanced out right now. what's the likelihood of running these stops here when we just ran stops down here, right? We just ran stops down here and we've moved our stops up to there, right? If you run stops down there, right? This is, what would this be? Okay, let's do it like this right here, right? We came down, we pushed up, we came down, right? We've run stops under here, got long, right? In the scheme of this price leg right here, right? This would be low-hanging fruit, scale out, right? So coming up, I'm scaling out. I'm not ready to close my entire position. My stop is moved here. I scaled out some, right? When I get here, I'm going to scale out some more, right? And my stop may stay there or may move up somewhere. I don't know yet because this price ain't run yet. And then this is my terminus right here. This is my terminus right there. I went long here and I want to get the full position taken off here, right? So what's the likelihood of running stops out right here in this move here after we've come up and we've broken that, we've run those stops right there, right? When we run that stop right there. And like I always, like you always hear me say, right? Once we take out like the buy side or the sell side for a big move, that's saying something, right? That's saying something. We're coming, right? We've come all the way, right? We've come all the way above 80% right here, right? We've come all the way above 80%. Once you get that far up, right? Once you get that far up with this much force, the likelihood of reversing starts to lower. It's getting less and less likely to reverse, right? Especially when you just coming off of this balanced price range, right? We just came out of this balanced price range, pushed up with force all the way up past 80, right? Pushed up with force all the way just past 80. And then what do we leave in the wake of leaving this balanced price range, right? Resistance. We left resistance, right? In the wake of leaving this balanced price range, right? And what is a telltale sign of, sorry, I'm trying to focus. What is a telltale sign, right, of a high resistance liquidity run? What is one of the telltale signs, right, of a high resistance liquidity run? What my note said. High resistance liquidity run. The market is printing conflicting PD arrays, right? No easy draw on liquidity, right? So looking at this right here, from without the benefit of hindsight, we just watching the price action, right? And this is, I'm taking all this time to make this an educational process for everybody, not just Lil Hawk, because this is what reading the tape is. This is what making a decision on pushing that button is. And you never discount when you got it wrong. It's so much education in when you got it wrong, right? I've learned far more from analyzing my unsuccessful trades than I have from analyzing my successful trades, right? When I analyze my successful trades, it was successful, so I'm less critical when I'm going in looking at it because it was successful. But when it's unsuccessful, I'm highly critical and I'm looking at every little nuance, right? So I done lost my place. I got to back up. We've come down. We took out sales stops below here for this entire price run right here, right? So we've come back up, right? We've come back up and we're starting to break market structure to the upside. All of this green area down here, let's make that red. We're going to make that red. All of that red area right there, make that red. There you go. All of that red area right there is a balanced price range. Just ran stops. Area down here is a balanced price range, right? I don't need these fibs anymore. Well, yeah, I'll leave it there, right? So, we left the balanced price range. Once we left the balanced price range, right, we left resistance right here, right? So we got resistance there, right? And I say we got resistance there, but it's support, meaning resistance to the falling price. So we left support right here. I'm sorry, because I'm thinking about the short, but when we left this area here, we left support right there, right? We left support. Now, let's zoom in a little bit here on this, right? We take off. You can have an implied fair value gap there if you want to look that deep into it, right? But here we go right here. We come down into this order block and we gone, right? So boom, we go up. Now, when price comes back down, right? We just ran buy stops, right? We got a balanced price range because we just ran out sales stops, right? So with the balanced price range, we're not anticipating price to come back down there. Price can come back down there. Why can price come back down there? Because we just hit some stops. Whenever price hits stops, it's a likelihood that price can reverse. That's why you always scale. That's why you always scale out. Whenever price hits stops up or down, there's a likelihood for it to reverse. You know what I'm saying? You got your whole thing of less likely and more likely, but there's always a likelihood that it can reverse, right? So now we've hit buy stops, so there's a likelihood that it can reverse. How likely is that, right? The algo is leaving you clues on the likelihood of it reversing, right? What's the clues, right? Showed you it's a balanced price range by taking off, right? Pang-ow! Right? What do we call that there? Pang-ow! That's the pang-ow right there. When we left this balanced price range, pang-ow! We took off, gone, right? What are we looking for when we get to pang-ow, right? We're looking for a retracement to join that pang-ow, right? We got a balanced price range and we got a pang-ow that way. You know what I'm saying? We pang out this way. Let's get the hour here. Right? I know, it's probably some people thinking, yeah, Tim, we know what's happening over there because you already seen it. This is where you learn how to trick yourself into that you saw it before it happened by looking at it after it happened, then going back and analyzing everything and look for what you missed, right? So consolidate it, right? Then the market said, I want to go this way, right? I want to go this way. The market said, I want to go this way. Market said, I want to go that way, right? Okay, market, you want to go that way. When do you want to go that way? I'm going to move these fibs now. They're in my way and they're getting on my, well, I'll just hide it in case I want to bring it back. In case I want to bring it back, I'll just hide it. I want to go that way. Okay, market, you want to go that way. When do you want to go that way? Right? This ain't nothing that ICT teach. This is just something that I have implemented for myself because of my own back testing, right? When we break structure, like here, and you see how we closed up there above these highs, that's the market saying, I want to go this way and I want to go this way now. If we would have broken this structure and wicked back down and closed below this right here, that would have been the market saying, I want to go this way, but I got some work to do back here first, right? So the market saying, I want to go this way and I want to go this way right now. Let me move this fib over. This fib is getting on my nerve too. I'm gonna hide it in case I want to bring it back, right? So that little area there, when it closed up here, right there, that little area right there. Now I want to go this way. Now I want to go this way. Now I want to go this way now, right? So what other clues did it leave us, right? When we left this balanced price range, we left this bullish order block right here, right? I know you're saying, Tim, how's that a bullish order block, Tim? Tim, you don't have a fair value gap, Tim. Tim. Remember the implied fair. Well, first of all, let's look at like this right here. We came up, price came down to an area of support, right? What's the support? This fair value gap, this order block. So price came down to an area of support and was met with heavy contrarian liquidity, meaning get out my face, punk, right? And then you got this huge up close candle right here. Then you got a huge wick on this side, huge wick on that side, right? If you go in there and get your whole little, you know what I'm saying? Look at 50% of this wick, 50% of that wick. That'll be your implied fair value gap right there. 50% of that wick. Man, if you don't get the wicking, then 50% of that wick, there's your gap right there. You got your implied fair value gap. Price came down into the order block and then went back up right there. Right. So we got an order block right here. So once we clear out this right here, once we clear out this right here, right, this right there, that's your came down into your fair value gap, order block, whatever, push up, right, come back down, where, boom, right back into what? The order block that it made, that it left on the way up, right? So there's another clue right there that price does not want to come back down here, right? So when you're looking at the price and you're watching the price move, right, that's the clue that it wants to go this way right now. I want to go this way now because I closed up here and I left a bullish order block back there, right? I left a bullish order block back there. Now, moving on to the market printing conflicting PD arrays. That makes it high resistance, right? Now, we've made a bullish order block right here, right? We've made a bullish order block there. We've come up to the top and we come down and we've set a bearish order block right here. So this 11:15 candle, that'll be 11:30 on Ninja Trader, right? That's a bearish order block, right? This 9 o'clock and 9:15 candles, that'll be 9:15 and 9:30. That's a bullish order block, right? You're in between conflicting PD arrays, right? So this fair value gap right there and this fair value gap right there that you're eyeballing is in between conflicting PD arrays, right? There's no clear draw on liquidity at this particular point right here, right? High resistance, right? Going against the grain for shorten, high resistance, going against the grain, right? Coming back into an area that's designed to keep price up, right? And that's everything. Those all of the clues. Well, I ain't gonna say all of the clues, but those are the clues that I've sat here and went through and dissected based off of, you know what I'm saying, what we know from the entry point back. Whenever you want to, whenever you want to analyze a trade where, I ain't gonna say you, whenever I go back and analyze a trade that went against me, this is what I do. I take it from where I entered, hide the rest of the chart, and I go back and I fine tooth comb all of the price action prior to. I fine tooth comb all of this price action right here, right there. And again, once you fine tooth comb it, if you still can't readily identify where you went wrong, right? Because I would never say you shouldn't have taken this trade. I would never say that. There's no such thing as you shouldn't have taken this trade, because if you see your model, you take the trade. If it fails, you go back and look for what you missed, because it's not the model, it's what you missed, because the model will appear in places where you should not be taking it, right? Because the model, let me back that up. The model won't appear where you shouldn't be taking it. The pattern inside the model will appear where you shouldn't be taking it, because the model takes all of this into account, right? So if all of this right here is not lending to your success, right? All of that's part of the model, right? Now, the pattern itself is, you know what I'm saying, break the market structure, create the fair value gap, trade back to the fair value gap. That's the pattern you're looking for. You're looking for the break, the takeoff, the retrace, right? That pattern is going to be inside the overall, but the model has a whole lot of narrative behind it, right? So hopefully some of this made sense to somebody. I was trying to control my thoughts. I'd be all over the place, but just for a quick review, everything that I was able to detect to lend to what was missed for taking this trade. Remember, entered on this 1230 candle, right? Entered on this 1230 candle right here. What was missed on for taking this trade, right? So this is 11:15. All right. We just ran sales stops, right? We ran sales stops into London, right? Just before London opened, we ran sales stops, right? On this 215, that'll be 230 counter for Ninja Trader. We ran sales stops, consolidated, and then left that area, creating a balanced price range, right? From this high, from the 645, that'll be the 7 o'clock counter in Ninja Trader, from the 645 high all the way down to the low. All of this is a balanced price range now, right? After leaving the balanced price range, we broke market structure and closed above the breaking structure, indicating that I want to go this way, right? When price consolidates, how does it tip its hand on which way it wants to go? It leaves in a hurry. Price consolidated, it left in a hurry. I want to go this way. I want to go this way now. We closed above the breaking market structure, right? We didn't wick off. We didn't just run stops and retreat, right? We closed above the breaking market structure. I want to go this way. I want to go this way now. That's giving support to the idea of this is a balanced price range. I don't anticipate it going down here yet, right? Created a bullish order block. That's another support to I don't anticipate price going down into that balanced price range yet, right? We come back down, met with high resistance. It's anticipated that during lunchtime, you're going to be in low probability setups, right? That's another thing that I didn't even catch earlier. We're going into lunch, right? We're going into lunch. So we're anticipating low probability setups. That's another thing that I missed. Low probability setups, and then boom, to lend to the low probability setup, the market is printing conflicting PD arrays, meaning anything in between here is going to be, if you're not already in the fight, stay out of the fight. It's going to be high resistance right now. It's a mob just tussling. If you jump in there and try to throw a punch, you may land on the wrong person, right? You either want to get in down here or get in up here, right? I've been on here over an hour. Yes, my IG just stopped. 59 minutes. I'm sorry, y'all. And then yeah, that's it. Balanced price range. I want to go this way. I want to go this way now. Left a clue to the bottom. I don't want to go no lower than this right here. Remind me that this is a balanced price range. I left this order block to remind. Hey, let's check this out. I just noticed this. What's the low on this candle? 39.74 even. And then the high on this candle that we was looking at. Wait a minute. The low on that candle. Oh, it's 39.54. I'm sorry, 39.54. And then the high on this candle right here is 39.54.50. So it came just inside this high of this candle that we was using as the balanced price range top, right? So we came just inside there, and it was like, up, I've hit my point. Let's go back up. So right there, we're trying to go short right at a spot where the algo doesn't want to go back down from. The algo wants to go up from here, but we're trying to go short, right? And we're going against the grain. That's why this side of the chart is very important, because you can see something inside here that makes it looks like, let's go look at the higher time frame on this. Let's look at the higher time frame. Let's look at the hourly. We're going to just walk it back up. We're going to walk it back up. Right? So looking at the hourly. Right? Looking at the hourly. The hourly tells a very different story. The hourly says, why in the world are you trying to short right here? This is what the hourly is saying. Why in the world are you trying to short right here? Too zoomed in. Add another note. I was too zoomed in when I was looking at this trade. Add another note. I was too zoomed in when I was looking at this trade. This is everything we marked up right here. That was, I want to go this way right now, right? On the 15-minute. This was, I want to go this way right now on the 15-minute, right? I want to go this way right now, right? That circle was where we closed at above the breaking market structure right there, right? Looking at the hourly, right? Looking at the hourly, it is clear that the market is trying to get here. It is absolutely clear that the market is trying to get here on the hourly, right? I didn't even have to go up to like 4 hour or nothing like that, right? It is crystal clear. And what I mean by that, again, we looking at this area down here. We just came down and we just ran out like sell stops right here, right? So we came down, we ran out sell stops, right? And then we wicked up there. You see how we came down here and we came here, small wick, right? Came down, small wick right there, right? Small wick there. And once we drop below this low again, huge wick, right? Huge wick, took off, right? Then we came up, came up, came up, came up, and then boom, got a break in market structure, right? Got a break in market structure. This low right here, I mean, this high right here took out this low right here. So now you are trying to go short. You are trying to go short inside. You're trying to go short inside a bullish breaker. Don't have an hourly. You're trying to go short right here. You're trying to go short inside a bullish breaker right at a balanced price range. You got a bullish breaker sitting on top of a balanced price range, and you're trying to go short inside a bullish breaker inside a bullish order block. You got a bullish breaker. You got a bullish order block on the 15-minute inside a bullish breaker on the hourly, sitting on top of a balanced price range, right? Add two zoomed in. Put two zoomed in on your, yes, noted, two zoomed in. Put two zoomed in on your notes. And see, this is why I say analyzing a trade that goes against you, it gives you so much education and so much. For one, you suffered the pain of a loss, right? So now you're going back and you're trying to figure out how not to burn yourself on that stove again, right? And when you sit down and you look at it, you ain't got no skin in the game right now, so you can think about it objectively, because you You looking for what you did wrong because you know you was wrong. You see what I'm saying? You know it went against you. You know you was wrong. So now you're coming in looking for what you did wrong. And if you're honest and you go through and do this process right here, right, it's going to be a long time before you make this same mistake again. And then if you're disciplined, you may never make this same mistake again. You know, and we all repeat our mistakes. We ain't perfect, but we are less likely to do it continually. You know what I'm saying? We may slip up every now and then. We might get greedy, but yeah, too zoomed in. Add that to your notes. Hey man, that's all I got. Hopefully I help somebody. Shout out Lil Hawk for asking for shout out Lil Hawk for asking me to look over that. I appreciate that. I really feel like we helped somebody today. I really feel like we helped somebody today with that right there. And I'm look at God. Look at I forgot to go look at it last night, and I looked at it today, and we got an opportunity to walk through valuable what you call it, journaling. We got an opportunity to walk through some valuable journey. This is all a part of journaling. When you go back and analyze your trades, we got a chance to do some valuable journaling today. Appreciate you, Lil Hawk, for asking for feedback on that in the Discord. And I'm sorry for taking so long to get back. Shout out if anybody else had already got back with Lil Hawk on there, I appreciate you for doing that. Yeah, I appreciate y'all for supporting. Let's go lower. We went higher. Let's go lower and see what this looked like lower. Higher told a story. Higher was like, hey, you should not be trying to go short right now. Lower tends to give more detail. All right, so based off the higher time frame, you know what I'm saying, we know, hey, the higher time frame is looking up, right? The higher time frame is looking up. And so when we come down to the 5 minute, yeah, even on the 5 minute. Now I will say that on the 15 minute, I will say it did look a little bit more enticing than the 5 minute. The 15 minute did look a little enticing, but the 5 minute don't look inviting at all as far as trying to short. The 5 minute does not look inviting for like, hey, I want to short, right? Yep, the 5 minute don't look inviting for, hey, I want to short. And the reason why I say that is because on the 5 minute, let's look at the 15 minute again. The 5 minute don't look inviting at all, right? Yeah, like on the 15 minute, it looks a little more enticing on the 15 minute. You know what I'm saying? On the 15 minute, I could see if you're zoomed in and not really paying attention to the higher time frame, I can see how this looks like. Yeah, jumping at the bit. Yeah. You know what I'm saying? Look like it's dumping and it's coming back up. You know what I'm saying? Because it's real subtle. It's real subtle on the 15 minute when we came below this low right here. This low right here, this swing low here, it don't even look important, right? It looks so nonchalant. It don't even look important at all, right? So when we pop under there, and then we're not even paying attention that the bodies of the candles are really respecting this implied fair value gap right here. We're not even, it's hidden so well on the 15 minute, right? If this was a real fair value gap, then it would be more clear you know what I'm saying, that, hey, the bodies are respecting this fair value gap, you know what I'm saying? But it's hitting so nicely on the 15-minute. Oh, it's hitting beautifully. Beautiful chicken flash. But on the 5-minute, when we look at it on the 5-minute, look how more important this swing right here looks on the 5-minute, right? We come down and we make this swing low right here and we take off, right? Just look on the 5-minute. You got to be out your mind to be trying to, you know what I'm saying, short after this right here, right? You got to be out your mind to be shorting after this right here on the 5-minute. You ain't got nothing over here supporting, you know what I'm saying? Let's go short on the 5. On the 5-minute, this swing low right here took off and took out this buy side. And then we came back down and took that same low out and wicked off of it. You see what I'm saying? We came down, we took that low out and we wicked off of it. It's like on the 15-minute, that low is so you can't even hardly tell that that's a swing low. That's how hidden it was, right? But we wicked off of it so, and then again, the hidden fair value gap that's mapped out from the 15-minute implied, I shouldn't say hidden, right? Look how it's just totally respecting that area right there. Now the 5-minute, the 15-minute, you got hit with the okie doke. It was enticing. It was enticing. Yes, it was. It was very enticing. But the 5-minute and the 1 hour, it was like, hey, you shouldn't be shorting at all right now. But again, if now this right here is going to be a sharing moment for me. I used to trade the 15-minute. That used to be my I ain't look at nothing but the 15-minute, right? But I found that as a day trader, right, the 15-minute is just, the 15-minute is not the entry time frame for me. The 15-minute is not the entry time frame for me, because if I use the 15-minute as an entry time frame, that's what I want to talk about. I'm glad I started saying that. Remember when earlier I started talking about the higher the time frame is, the more risk you got to take, right? Because especially with futures, right? The higher the time frame is, the more risk you're going to have to put on, because the moves are greater moves on the higher time frame, right? So let's just say we're just gonna stick with you want to go short. You want to go short here. We're gonna stick with it. We're not gonna reverse because we know which way it go. We're gonna stick with you want to go short here, right? So on the 15-minute time frame, trading with fair value gaps, no matter which fair value gap you enter, this is where your stop loss has to be, above here, right? If you want to put it right there, that's fine. But I like to give it at least a point. I like to give it at least a point, right? So that's where your stop loss would have to be. 1 hour stop loss. Right? That's where your stop will have to be, no matter what. Let me get this other stuff got to go. This other stuff got to go. No, I need it. I can't take it off. Okay, so on the 15-minute, no matter which fair value gap you enter into, that's where your stop will have to be, right? So for easy math, we're just going with consequent encroachment of each fair value gap. So stop loss is at 39.90.50, right? If you entered on the first fair value gap consequent encroachment, minus 39.68, minus 39.68.25. Got a 22.25 point stop loss. If you go in the first fair value gap at consequent encroachment, and then the second fair value gap, 39.90.50 minus 39.76.75. Uh-oh. 39.76.75. 13.75 point stop loss. So we're looking at a 22 point stop loss and a 14 point stop loss, right? Entering on the 15-minute, because that's where your risk would have to go, right? That requires a huge that's a huge amount of risk. A 22 point stop risk and a 14 point stop, that's a huge amount of risk, in my humble opinion, right? In my humble opinion, that's a huge amount of risk, right? Because 22 points on the ES, that's $1,100, and 13, or that's $1,100 or $110, depending on which one you're trading. The MES is $110, the ES is $1,100, and then well, I'm just gonna do exactly what it is: 22.25 times 50. So a little over $1,100 and a little over $100, and then 13.75 times, and it's a little over $687, or a little over 60, like just say $69 on the MES. That's a huge stop, huge amount of risk, right? So what I've learned is, 1 hour, I get my draw on liquidity from the daily, right? This is where I'm sharing. I get my draw on liquidity from the daily. Where is the market trying to get to, right? Then I mark up the 1 hour PD arrays, right? Once I mark up the 1 hour PD arrays, then I drop down to the 15-minute, and I will mark up 15-minute PD arrays that are significant, right? Once I do that, right, I don't enter on the 15-minute, right? I try to enter on the 1 minute, right? I look at the 5, right? I look at the 5-minute. Let's go down to 5 minutes, right? I look at the 5 and I try to enter on the 1 minute, but the 5 is like this. I will use as an entry on the 5. On the 5, I will use as an entry, but I'm going to confirm my entry on the 1 minute before taking it on the 5-minute, right? So with that being said, now we got everything is marked up on the 15-minute, right? We still sticking with want to go short. Now let's go see if we can find something here that would be that we could have used for a short. Since it's no juju, no bueno, really can't even. Because see, the fair value gap is in the discount. So looking at it here, it don't even ain't even no way to justify. You know what I'm saying? Because there's no Okay, we're gonna pretend now. Now all the real stuff is going out the way, but we're pretending now. We're pretending that this up close candle right here gave still supported reason for us to want to go short. So we're looking at from this range, we're looking at from this candle's high to this candle's low, right? As the price range that we're dealing with right now, and we still want to take the short, right? So this is the fair value gap right there that we're trying to go short in, and this is the high above the fair value gap that's enticing us to go, because this is in the premium. This will be in the premium, and that's the high, right? So, and we're going to put it one above there. Stop loss there, right? Consequent encroachment from there is 39.67, right? That's what, 8 points. What is that? 8 points. 39.75 minus 39.67. 8 points. Yes. So from consequent encroachment on this fair value gap to the stop loss is 8 points. So, right, I will take a stop entry on the 5 minute, but before I enter it, I'm going to confirm it on the 1 minute. So now I need to go down and look at this fair value gap that I want to enter in. God dog it, Tim. I need to look at this fair value gap on the 1 minute, right? Because this is where I want to enter, right? So now I've marked up my 5 minute entry. This is where I'm going in on this 5 minute. Now I'm gonna go down to the 1 minute and watch price coming up to that 5 minute fair value gap. I know it's probably not gonna work out because this ain't no real situation, but this is how I trade, right? So boom, there you go. So now that we're inside that 5 minute fair value gap that I want to go in, this is consequent encroachment of that 5 minute fair value gap. We got a 1 minute fair value gap that lines up with it. We do have a fair value gap above it. So I would, if I'm taking it off of the same spot, I say, okay, that's where I want to go in on the 5 minute, right? We do got a little bit of upside risk, right? I'm fine with that because it's inside the 5 minute fair value gap. So I'm just going to stick with my 5 minute consequent encroachment. And this is what I mean where I verify it on the 1 minute, right? I'll take it there. Boom. I'll take it there and then go. But as you see, and then on the 1 minute, right here, where we entered the fair value gap that we entered, the 1 minute was also showing that it was turning around, right? The 1 minute was also showing that it was turning around, right? We were starting to go the other way, right? The 1 minute was giving you the 2022 model going the other way when you was entering, going short over here, right? Because we went short. Let's find the exact candle we went short on at the high. Which said the high. I think he said the high of that candle. Did you say the high of that candle? Yes, it was at the high of this candle right here. This area right here. So that's going to be the high of the 1230 candle. So from 1230 to 1245, let's find that high on the 1 minute. From 1230 to 1245. Man, Lil Hawk, you gave me a whole lot of stuff to run my mouth on today. So from 1230 to 1245, 1245. So these two candles right here made the high. So this is the high. That's the high of that candle. So that's when you enter, right? Now, knowing the 2022 model, right? Run stops. We came down, we ran stops, right? Came up, short-term breaking market structure, right there. Right, we came up, came down here, came up, had a breaking market structure right there. Right, there's your short-term breaking market structure. Came down, fair value gap right in there. Volume imbalance right there. All right, if you enter in on this fair value gap, what does the model say? Put it below the swing low, right? Swing low there, overshoot the fair value gap some, make you do the whole tight, and then you go. That's the market maker. That's a 2022 mentorship, right? Have another breaking market structure right there with a fair value gap there. We start consolidating. Now we're consolidating. This was the short entry, but we're consolidating right here. And then what do? Take off, right? Take off, going away, because we already got the breaking market structure right there. We got the 2022 model right here. Boom, come up, consolidate, and give you more out of your trade. But the 1 minute, was saying go the other way. But I was saying that's how I confirm what I want to do on the 1 minute by looking inside that 5-minute candle. That 5-minute candle. What you say? Help me a lot. Don't fly, Pelican. Fly, but come back. Hey, hey, what is the market doing? I haven't been watching. I ain't looked at the market all day. I've been running my mouth. What is the market doing? Again, thank you, Lil Hawk, for thank you, Lil Hawk, for asking to look at that. Oh, did we get that buy side? Did we get that buy side that we was looking at? I see we pushed up. Did we get that buy side that we was looking at? Let me take all this junk off my screen. Hold up. Do anybody want to screenshot that before I take the junk off my screen? If y'all want to screenshot this right here, let me get it back to where. Let me see. It's gonna be too small with 1 minute. How does 5 minute look? 5 minute too small. I was looking at 15. I drew it on 15. If anybody want to screenshot this before I take it off, put a one in the chat. I don't need the stop losses because we was talking about something else then. Let me hide this for a second. Okay, I see a 1 right there. All right, I see a 1 right there. So put a couple of notes on there. Sorry, y'all. I got crazy quiet just then. I got crazy quiet. You know how I do it. I start uh this is tearing me up. This is beating me down. The link I just put in there, that's the actual picture that I just saved. But if you don't want that right there, there's your opportunity to screenshot it yourself. If you want, I tried to add a few notes that I can remember, stuff that I was saying. That right there. And then again, if you want to click on that link right there, that's that picture right there, where you can have the actual picture. I done forgot what I was about to go look at now. I ain't gonna hold you. Oh, did we get that buy side? That's what I was about to look at. Now I can delete all this stuff here. Did we get that buy side? Not yet. Not yet. Let's look at this and think about this for a second. What we got going on here? What are we setting up? Let's look at this and just you're welcome. let's look at what we got a goings on. These daily candles on the ES. It's almost time for me to get ready to go to the gym. And I hadn't planned on like doing no trading today. I usually don't do nothing on the morning before FOMC. I usually don't even watch the chart. I usually don't watch the chart at all. To like not entice myself to want to get into anything. Because the market usually don't do a whole lot in front of FOMC. Let's see where we at. We're still around equilibrium. Yep, we're still around equilibrium. We're still in the middle of the road. Price still acting as expected, right? Wait around equilibrium for the Fed stuff to come out. Now, looking at what we've done thus far. Okay. Come down. What's this? February. So from the February high, came down, had a failure swing, right? Breaking market structure to the downside, right? We got 1, 2 gaps there. Came down, hit the order block, pushed back up, right, into the volume imbalance. That we found out that was actually a new week opening gap. Also, price acted as we expected there. Nice rejection there, letting us know that, that's a rejection. Start looking for reasons to go short. Price came down, took out sales stops, came down, took out sales stops, came down, took out sales stops, and then rejected. Heavy rejection off of the January low. Did not take out the December low. We took out the January low and a low at the end of December. So we didn't take out the December low, but we did get some of the December lows. So ran up on the January lows and then heavy rejection off of there, right? Heavy rejection leads more to, hey, reversal, right? Heavy rejection. Okay. Price came back down. Let's check consequent encroachment there on that wick. Checking consequent encroachment. Boom. Consequent encroachment on that wick. Heavy rejection up. Let's check consequent encroachment there. Consequent encroachment strong with this one is. Consequent encroachment strong with this one is. Right? Consequent encroachment on that wick. Right? Came back down. Close to consequent encroachment again. Wicked off of it. Right? So heavy rejection in this area right here. After running sales stops. Okay, so boom, just ran sales stops, got long, right? This right here would be first scale, second scale, third scale, terminus for anybody that got long down here after taking out these stops right here. Now, when we went long over here, let's go back a little bit more. When we went long over here, sales stops there. We got long. So all right, so we got long down here and we took off. So our sales stops are under here. All right, we took off, came down, hit that, took off again, Price supported it there. Now we moved our stop there. Either there or there. We're going with the safe one here. Our stops are there. Came up, took our buy side, right? That's where the stops are. So we run stops up here. Right. So we came down here. Right. So we run stops up there. We got stops under here. So we take people out up here. So we take people out up here, come down, and we offset our positions down here. Right. Came down. Anybody who was slick enough just to move their stop from there to there, they felt the wrath too. Most of the people moved their stops there, right? Got soaked up. They felt the wrath, right? So, and then this wick right here, when we came back down, that was the trickery. So, oh, look how they do you, right? Came back down, hit there. Anybody that was here, they just got took. Anybody that was here, they laughing. Ha ha ha! You got took. You got took out. Rejected off of that, right? You got took out. Ha ha ha! I'm smarter than you, right? Right? You got took. Ha 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 ha! You got took out. I'm smarter than you, right? So now everybody that got took out down there, they all ticked off. They're mad, right? Then you got somebody say, hey, it's safe to move our stops up now. We can move up after the price starts moving, right? After the price start moving, we can move our stops up after the price start going up after that right there. And then they still got knocked out again if they move their stops up too high. Because see how when they come down there, see how this came back all the way down to that right there, how the wicks are wicking and overlapping the wicking, right? Anybody that move your stops up too high, you're being taken out over and over again, like repeatedly, taken out, hitting people with the 52 fake out. This dip down again, this dip down again. Everybody getting taken out, right? And now that we've taken everybody stops out, right? Now that we've taken everybody stops out, now the stops are there for people who went there. Again, that was the people who came up here, came back down, and they willingly sold it to the people that was right here, right? They were willingly sold it to the people that was right there, right? Offsetting. Now we're going back up, right? We've come down, we've taken out stops. All the people that was under there, we took them out. Now the stops are here now, and we're going back up, right? Now, this gonna be the first trim, because now, right, everybody that went short came down here, you know what I'm saying? The stops were up there, right? And then as it was coming down, you got people that's getting more and more brave as it keeps dropping, right? So now, first stop for the buy stops for the people that were down. Well, actually, if anybody was brave enough to go there, that would be one, right? Because that's the last leg. So first stop for these people that went long down there. Second stop for the people that went long down there. Third stop, and then back up to the buy side. Now, where are we now? Wick, coming up here, getting ready to go into FOMC. right? Got an imbalance right here. Daily imbalance right here. Still got that much there. Again, not coming all the way down to here because we've traded both ways there. Right, we've traded both ways there. Now, for the entire price run from the failure swing down, right? From the failure swing down, we're at equilibrium, right? From the failure swing down, we're at equilibrium. Now, ICT teaches anything from OTE down when you're coming up, right, should be shaving points. Anything from OTE down as prices coming back up should be shaving points. When we get to just above equilibrium, right, that's that buy side that I had pointed out right there. We got a fair value gap right here, just above equilibrium in the premium, right? Meaning price can come here and still come back down, right? Now let's look at the likelihood of it, right? Price can come here and still come back down, right? So we've come down, right? We've taken stops, but we've also left relative equal lows, right? Relative equal lows. Strong rejection off of that. Completing the market maker sell model without taking out the sell stops under the lowest low of the consolidation, right? It doesn't always have to. This strong rejection off of there, right, shows the completeness of that market maker sell model. All right, so now we're pushing back up, right? A breaking market structure here, right? A breaking market structure at that 41.19 would be super bullish. Breaking market structure at that 41.19 would be super bullish, especially if we get a closure above it, right? The way we left out of this right here, the way we left there yesterday on yesterday's candle, right? That high, from that high to that high right there are playing an important role, vital role. Right? Vital role right there. Why do I say that plays a vital role? Move out the way, Phil. Go to the high of that candle right there. Going to the, I actually can go all the way up to that high right there. I actually can go up to that high right there. Right? Right. So came down, offer buy side, sell side both ways, heavy rejection, then left that area. So now balanced price range right there. Now Balanced price range works two ways, right? Balanced price range works two ways. Either I'm done with it and I don't want to go back, right? It's always I'm done with it and I don't want to go back right now, right? I'm done with it, don't want to go back right now, right? For a long time, or I'm done with it, got a little something to take care of, like this fair value gap, then I'm gonna cut through it like butter, right? Always play out two ways. Now, what are the clues that the market has left for us? Right. Mr. Bullish order block. Mr. Bullish order block right here. Okay. Now, Mr. Bullish order block right there. Now, and that's why I said this high down to this high plays a vital role in what's going on right now, because we got a balanced price range, right? Got a balanced price range because we left that area after offering sell side and buy side throughout the entire range with strong rejection at the bottom. Every daily candle, except for this little thumpy one right here, has a strong, oh, he got a little thumpy over there too. Strong rejection off of each day, right? This high right here, that's the high of this bullish order block, right? This high right here, that's the high of what is looking like. I mean, that's the low of what is looking like a bullish fair value gap. Unless we just, the rest of the day, we just tank and come all the way down here somewhere, we're going to have a bullish fair value gap. And this right here is going to be the low because we're so far away from it. We can tank now. Don't get me wrong. We can tank and come down there. But if we don't tank, that high is going to be the top, I mean, the low of the bullish fair value gap. And that high right there is going to be the high of the bullish order block resting at the top of the balanced price range. Now, the reason why I say the breaking market structure here is going to be super bullish. Now, why do I say this right? Say that right there. I say that right there because a breaking market structure right there would give us a bullish breaker. A breaking market structure right there will give us a bullish breaker. That'll give us a bullish breaker. So if we get breaking market structure there, will give us a bullish breaker sitting on top of a balanced price range, right? Inside that bullish breaker will give us a bullish order block, right? And inside that bullish breaker would give us a bullish fair value gap, right? Down here. And then on top of that, if we break market structure there, now we have a bearish fair value gap that we're expecting to act as some type of support. If we get a breaking market structure there, boom, breaking market structure. They say we break market structure there and come up and fill in this bearish fair value gap right there. start to come back down. Now you got a lot going on inside this bullish breaker. That's why I say a breaking market structure here would be very bullish. But we got to get through this bearish fair value gap first, right? Because anything OTE and down is a possibility of a reversal. That's why you shave. Shave here at this buy side. Shave there at that buy side. Even though that's very bullish, you shave there. So you shaving at this buy side, shaving at that buy side, right? Then the next point to shave is, it's a little one here. You got a little point to shave there, and then all the way back at the top. Right. So that's why you always shave on the way up. OTE and down, you just start shaving because it's always a possibility to reverse and keep going down. It's 11:08. Time for me to get ready to go to the gym. I appreciate y'all for hanging out with me. Hopefully I was able to share something that helped somebody. Again, we're in a very interesting place. I would love to see how FOMC plays into this. The market is leaving little clues that it wants to continue up. The buy side that we was looking at was right in the crosshairs with the clues that it's leaving, looking like it want to get there. But let's see how it plays out with FOMC. If FOMC rejects it, there's a lot of support to get through. Bullish order block, consequent encroachment of that wick. If this candle closes above 38.98, 38.89.50, bullish fair value gap. A lot is oh my goodness. Tired. And I got to go to the gym. I think that's it. It's been a long one, man. I appreciate y'all for hanging out all this time. This is as close to the charts I'm getting. I always do something stupid on. That's what I was just saying. I usually don't even look at the chart on FOMC. I usually don't even look at the chart. I'll see y'all tonight at 6. Now, the boys got dentist appointments, but we should be back by the time it's time for 6:30 because we'll be back. But yeah. So I'll see y'all at 6:30. They got dentist appointments at like 4:15. So yeah, we'll be back in plenty of time. But yeah, I'll see y'all tonight at 6:30. About to get ready to go to the gym. Y'all enjoy the rest of y'all day. Oh, excuse me. Ooh, excuse me. Man, gone.